And welcome to another update video about ADA. Today we've seen quite a bit of volatility today, not to anyone's surprise hopefully, because it was Fed day again, 25 basis point increase. As I thought, if we get 25 then we'll see a bit of a drop possibly, because I think the market had partially priced in already no interest rate increase, but at last here or most recently the Fed Watch tool did show a 25 basis point increase as forecast. That's what I was leaning towards as well because of that, because I'm normally leaning towards what the quite accurate Fed Watch tool is saying. The only problem with that is I think that changed quite a few times, and I think the market might not have fully priced that in, which is why we saw that drop. No change to the wave count needed, of course. I mean, we talked about that in the previous video. We might get that C wave leg down. From that point of view, I'm actually quite pleased that the scenario here doesn't need any change despite the volatility. So we had quite a robust scenario in place, I guess, here that prepared us for the Fed day. So yeah, we've just come back into support here. This is a support area I only highlighted. I think I did only add it today, didn't I? So yeah, that's sort of fine. We came quite deep into support to the golden ratio, the 61.8 retracement, 35 cents. Let's see if we can turn around here. We've already seen some buying pressure come up, but there's still the risk of one more low here, because if you count it, well, it depends on how we count. I mean, could count that as a B wave triangle as well, to be honest. Here, A, B, C, D, E, and then the C wave down. Yeah, I think that's probably the best way to count it, to be honest. And it reacted to the golden ratio, something like that ADA did here as well on Tuesday. And yeah, it's a bit of a wait and see now. Ideally, it's holding support here somewhere in this box. Shouldn't go below 34.1 cents. If it does that, then we need to think about how we adjust the count. It might then mean that, let me just change. Let me just change the color of that so we can distinguish, because that's the higher degree count here. So like that. Yeah, we might then need to look at this in a different way here, but I think this is sort of how it makes sense. A 1-2 setup, then here another 1-2 setup and another 1-2 setup. So far, if it reverses now, then we had 4 support areas in a row that worked out. But yeah, it now needs to develop that buying pressure and start to rally again. There is limited structure in this move down, as it typically happens on these Fed days. So yeah, I wouldn't be surprised to come down a little lower, but we've already seen some reactions, and it should stay above 34.1 cent on such a Fed day, of the 78.6 retrace in this support area. Otherwise, it will probably fail as a wave 2. Yeah. And the point I try to make here is, as long as it holds that level, it can give us that third wave to the upside that we talked about, measured off the latest low. If we talk about targets here, we talk about targets and we talk about the 44 cent level for that third wave. Yeah, and that's basically everything for now. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.